Wall Street is trading under mixed market sentiment. Futures on the US benchmark indices are gyrating today. Investors are closely monitoring developments in the US-China conflict. The US dollar index is testing the lowest levels since March. Investors are puzzled about uncertain prospects of the relations between the US and China. Washington ordered China to close its diplomatic consulate in Houston. Escalating jitters signal that relations between the countries could reach boiling point anytime soon. The market assessed this event with the same gravity as the soaring pandemic rates. Besides, the US authorities have not come up with a new stimulus package yet to combat the pandemic-driven crisis. Yesterday, Donald Trump voiced concerns about rampant rates of new coronavirus cases that also dampened investors' confidence. The Dow Jones opened a New York trade with a 0.16% decline. Futures on the S&P 500 edged down 0.13%. At the same time, Nasdaq is extending its climb. Today, leading high-tech giants are due to present their financial records for the second quarter. Their stock propelled a rally in the US equity market since March. Investors are anticipating reports from Microsoft and Tesla. The stock of the electric vehicle maker could be added to the S&P 500 index if Tesla reports corporate profits for the fourth quarter in a row. Now traders are speculating on whether the US dollar is doomed to hit rock bottom. No one will dare to argue such forecasts. Indeed, recently the US dollar has been battered by negative fundamentals with prospects for a further bearish trend. In March, its index rocketed to 103 points. Since then, it has tumbled to 95. Technical analysis suggests that the index could plummet to near 94.60, the lowest levels of the year. The ongoing situation confirms such predictions. In the early North American session, the index was trading at about 94.89. Broad-based weakness of the US currency also reduces demand for call options on the greenback. Traders are exiting long positions on the US dollar against the euro, yen and the Australian dollar. Strong support levels are seen at 94.60, 95 points. Experts do not rule out that the greenback might stall its decline at those levels, and later market players could push it to resistance at 97.50. The Canadian dollar is taking advantage of the greenback's weakness. The pair slipped to the level above 1.34. The loonie finds support from the oil market as oil prices hit fresh highs. The nearest WTI contracts climbed above the level of $42 a barrel. Today, the price is making a downward correction before a weekly update on the US oil inventories from the EIA. In the evening trade, WTI futures fell 1.6%. Today, traders are alert to inflation data from Canada. The Consumer Price Index jumped in June to the highest levels in over 9 years. Such a spike comes as a result of lifting lockdown measures. The US is due to report on new home sales. That is all for today. Thank you for watching and see you back tomorrow.